Hello, traders. Gary Wagner with Gold Forecast here. Approximately 2 p.m. Sunday, the 10th day of April, which makes it Monday in Australia. The market has been open for a little over an hour, and we currently have gold trading quietly but up 40 cents. As you can see, our current print is 1475.60, 1476.60. Ask, bid, spread. As you can see, we are looking at our basic daily chart. This chart, of course, contains our channel lines, our Elliott wave, as well as our Fibonacci extension. If we look at the activity of today, you can see it's extremely quiet, but interestingly enough, the one thing that I'm noticing is this open above this particular extension point. And the extension point I'm talking about, of course, is the 23 extension at 1473. To me, that's a critical statement because if, in fact, it can hold this level, the next real resistance target that we have is really 1492, which is getting closer and closer to that target of 1508, which is where I believe this wave can go to on a minimal basis. Now, the reason that I say a minimal basis is that when you look at straight Elliott wave doctrine, it states in terms of there are what I call three immutable laws or unbreakable rules. One of them is that wave 3 cannot be the shortest of all three waves. That's number one. Number two, wave 3 must be an impulse wave. We know that. And then the last of the three rules is that when you do get to wave 4 cannot cross into the territory or price range of wave 1. Those are the three immutable laws of Elliott wave doctrine. Following that, it seems plausible and likely, actually, that this particular rally that we have will take us well past 1500. And as you can see, in terms of my different expectation levels, I have marked them all right here. And as you can see, the 50% is 1508. That is really where I derive that figure from. Traders, we are trading quietly higher, but we're up 60 to about $1.60 right now. We are currently looking at a daily Henkin Japanese average chart, and I draw particular attention to this most current candle. Of course, there are a couple of things that we want to look for when we look at these Henkin candles. The first of which, of course, is there an absence of the lower wick? That's really, really critical when we're trying to determine if the trend is still intact and if the trend is strengthening. Now, we've got that on consistent and consecutive candles. The other thing is obviously going to be body size as we compare them. And as you can see, the body size on this candle right in here is very, very nice. It's nice and sizable. It's showing an extension. It is absolutely showing us that the current trend that we're experiencing is absolutely, at least on a technical basis, realize fundamentally anything can change on a dime. But technically, we are still in a runaway bullish rally currently. And really, to illustrate the kind of rally that we're having, if we look at the MACD, the moving average convergence divergence, and that, of course, is this particular technical study right down here. What we want to see is, are the moving averages converging, meaning moving closer together, or diverging, going further apart? There's absolutely no doubt. If you take a look at our different moving average lines, you can see that they absolutely are moving apart. That's another indicator of a bullish move. You've gotten, first of all, this particular faster of the two crossing above, and the slower of the two staying below. Those are indicative of a market that is rallying. As you can see here, this is where that market is selling off, and what you'll have is the longer term moving average. You can see the shorter term then crosses above And as it crosses above, that indicates that rally itself. Now, when we take a look at that in light of this current activity, we have that same thing. We have that short term, which has moved above the longer term of these moving averages themselves. That, to me, is extremely bullish. We will watch to see how the market wants to trade here. Of course, from here, it's going to move into Hong Kong, to London, and then tonight in New York. We'll get a much more solid indication of where this market wants to go. But at least tentatively, we've had a firmer open. There doesn't seem to be a lot of selling. And after the kinds of days we witnessed last week, rounds of profit taking are to be expected. However, rounds of profit taking will only take place if there isn't the belief that the market's just going to continue to rally hard, because you don't want to take profits if you're in the middle of a rally, but you do want to take profits if you think it's hit a certain high and it's going to backtrack off of that. We are in record territory, and unlike when we were trading at these record tops, when we hit that triple top where every time it went to the top of the market, hold on. As I said, and unlike every time it went to the top of the market, and the areas that I'm really talking about, the triple top, is this top right in here. So as you can see, the market would come down, it would trade up, but you would get sellers in the market. Those sellers would cause this to be the top, and of course, the market would then come back down, it'd come back up, and it would test the area again, but pretty much immediately, as you can see, it would come back down. This is that triple top, and of course, once we hit this area here, this was that absolute top. This is our B wave here, and then in terms of our Elliott wave, our C wave down, this was that retracement. We are getting different kind of activity, because what's happening is, once we hit our tops right in here and we surpass them right here, as you can see, there really has been no sign of the market retracing as we saw back in, call it December through January. We'll call it the January-December effect, but that's where we hit the triple top and we got our correction. What we are witnessing, traders, is the fact that we're in a full-blown impulse phase. You see, during a corrective period, and this was getting at the top of that impulse phase, and the way that I had my count was, in essence, this is your absolute top here. So this is going to be your fifth wave, but I called it an extension because as I got to my count, of course, this was wave 5. And the way that I looked at it was that this fifth wave came down, came up. This would be 5. Then after the 5, you would get a 6 and a 7. This was your 7 right in here, and then your A, B, and C. Either way that you count it, whether you count this as a 5 or an extension as a 7, absolutely positively, as we look at it, this is our corrective phase right in here, and that correction, that ABC, took us to the bottom. And you can see that the market is truly reacting differently. Now, as I said, we might get some sort of a correction at any point, but it is absolutely acting differently than we have seen in the past. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily report and update. Bye-bye.